Hey there, it's Jason Eichmiller, and right now I'm coming to you with an emergency or a warning. If you're looking to get a reverse mortgage, certainly in the month of September, October, November, or beyond, we've got some challenges. We're seeing the reverse mortgage, the hecm loan sizes drop, and not just this month, but it's a pattern. So what I'm going to do is I'm going to share that data with you, and I'm going to try to help you figure out why these loan sizes are dropping. We're going to try to, without a magic crystal ball, we're going to project what it's probably going to look like in the future. And then, just like we do every month, we're going to take a look at age 55, 62, 72, 82, and 92 and tell you how much money you can get out of your reverse mortgage right now based on various home values. So if you're with me, let's get going here. So as you can see, this is the thumbnail that you probably clicked on. Emergency reverse mortgage loan sizes dropping. That's exactly what's going on. So first off, very, very basic stuff, because this is important. Again, I don't want to just share with you what's going on. I want to share with you why this is going on. So how do we calculate reverse mortgage loan amounts? We're looking at age. We're looking at home value. And there's one more thing, and if you've been with me for a while, you know exactly what it is, and that is interest rates. And let's take a look at what's going on with interest rates here. So, and what we're talking about it's basically the Fed's hike. So we know that they increased them in July. We've got a meeting later this month where we don't, and this is all guessing, right? This is all educated guesses, but we think there's a slim chance of the interest rates going up this month. Woohoo, that's great. But November and December, we think our guy Jerome Powell over at the Fed, they are going to continue to increase the rates. At least there's a decent shot of them increasing the interest rates. So we'll take a look at, in a couple of slides, we'll take a look at what happens when interest rates go up, and also conversely, what happens when interest rates go down. But before we do that, just want to introduce myself real quick. If you haven't seen me before, if you haven't seen any of these videos, my name is Jason Eichmiller. I'm kind of in the back of this picture right now. This was taken, well, Alyssa, my 13-year-old, is taking this picture. I own and run Reverse Mortgage Reality and Key Home Lending. I've helped a little bit over 460 seniors since I started doing this in 2008. There's my contact information if you want to get in touch. I'm not going to read it off. You can push pause on this video if you want to reach out, but you can call me on the phone, email me, or visit the website. The website is reversequotes.com. And there you'll just have a little bit of information. These slides, they always do it. They always go fast. So I'm going to go back here. So you'll see a little bit of information. You'll be able to put your information in on the right. I think if it's on a mobile phone, the form submit will be below, but then we can pick a time to chat. Also on the site on reversequotes.com, there's a bunch of interviews that I've done with some seniors that I've helped, seniors' children that I've helped. And there we go again. Well, that's okay now. So next slide as we're there. This is a testimonial that I just got from a gentleman named Henry. And Henry's a great guy. He was looking at a reverse mortgage. He had heard some horror stories, heard some bad stuff, but he found me on YouTube as well. And we went through the process. He was a great, great, great guy to work with. And I'm so happy that he's in a better spot. But that was a testimonial. I just got it in about a week ago or so wanted to share with you. Now, let's take a look at many other testimonials as well if you go to the website or if you just ask me for some. So what happens? When interest rates go up, as they've been doing, what happens to loan sizes? If you've been with me for a while, you know, but let's go ahead and guess. Go ahead and if you hit pause on this video, type in below what you think. Interest rates go up, what happens with reverse mortgage loan sizes? I'll wait. All right, enough waiting there. When rates go up, loan sizes drop, and vice versa. When rates go down, reverse mortgage loan sizes go up. And we look at the history of these hikes. You can see from March of 2022 through the present, the last hike was in late July 2023. But we've seen they've gone for all the way from 25 basis points all the way to 5.5. So that has a big strain, obviously, on regular mortgages, on home equity lines, on credit cards, all this stuff with the rates going up. All these other rates are going up, which is making it tougher for us to afford to live, but also with reverse mortgages. Again, when rates go up, reverse mortgage loan sizes go down. And we think, again, re-showing this slide right here, we think that there's a pretty good chance that rates are going to at least be increased once, if not twice, this year. All right, enough interest rate babble here. You are probably here to see, hey, what can I get out of my reverse mortgage if I was to do one right now? So let's see here. Since May, so in May, if you look at this little chart that I made here, in May, the one-year treasury rate was 4.79. Today, actually, this is as of yesterday, so give me 1/100 of a percentage up or down, but today, the one-year treasury rate is 5.38. So what happens, again, when rates go up? Look at the hecm loan size, and by the way, this is for a 72-year-old with $1 million home value. Well, used to be 381.9. Now it's 349. So that's a drop of almost $33,000, which corresponds to 9% of the loan size was lost just with the rates going up about 0.5%. Okay, so you can kind of extrapolate that and you can think, okay, well, what's going to happen if the rates go up in November or December? We're probably going to see this 349 drop. But we're not 100% sure they're going up. We just think that they probably will. So let's take a look at what's going on right now. 55-year-olds, you know how we do this if you've seen this before. If not, we're going to look at a 55-year-old, a 62-year-old, a 72-year-old, 82-year-old, and 92-year-old. And we're going to look at the loan sizes from August to now and kind of see what happened. We're not going to go over every single one of these because you have that wonderful pause button. You can always pause it and write it down. And then also it's very likely that you're not going to fall into that exact age or this exact home value. I'm looking at 400, 700, $1 million, and $2 million in home values. If you fall outside of those ranges and you want to see what you can qualify for right now, drop me a line, give me a call. Glad to run the numbers for you. So, all right, you can see right here, the hecm at age 55, the hecm is a no-go, no possible, but the proprietary is there. So you can actually see that the proprietary has basically stayed the same, except for this little pocket with $1 million home value. There, it's dropped about $11,000 or so, but everything else has pretty much stayed the same with the proprietary. You'll see that the hecm is it's way more interest rate dependent than the proprietary reverse mortgage. So, age 62. Now you can see, if you look at the proprietary for a second too, you can see the loan sizes are about the same, and that's pretty consistent. I'm more of talking about the hecm in this case. The hecm is dropped on a $400,000 home value. It's dropped 6. On a $700,000 home value, it's dropped about $11 million. You can see it. $2 million home value. I mean, the hecm's getting hit by these rates. By the way, let's go back here. The reason, and again, if you've been with me for a while, you understand it, but the reason why we're showing NA for the hecm at age 55 is because, well, the minimum age is 62. So if you have a 61-year-old, you're going proprietary. If you're going 62 or plus, you're going hecm. And if you're age 62 or plus and you have a spouse who's younger, we can also do a hecm. Now, of course, as you may know, also the maximum home value for hecms, which is the FHA reverse, it went up from 970 to 1089, which is good news, but they're also lending lower amounts. So just word to the wise right there. So, all right, we're done 62. Let's go to 72. Age 72, what's going on? Same thing, the proprietary, we're not going to spend a lot of time on it because it's basically the exact same. The hecm, though, look at that, $5,000 to $6,000 at a $400,000 value. At a $700,000 value, we're over $10,000 short. This is just in a month. Had to get a drink of water here. $1 million value, $15,000 or so, $2 million, even more. Had to interject a joke right here. This is kind of dry stuff. These men are they whistling at her or are they wheezing at her? Calm down, Betty. They're not whistling, they're just wheezing. I love it. Cracks me up. All right, let's go back to age 82 here. 82. What's going on with the proprietary versus the hecm? The only notable thing is if you go to a $2 million home value on the proprietary, you're returning a little bit more money, so $4,000 more. Gobble that cash up. But the hecm, again, the hecm is returning less cash. Here's a trend, right? Age 92. All right. Now, once you pass the mid 80s, the hecm juices, meaning the hecm gets more powerful and the proprietary loses a little steam. So still, the proprietary is actually doing better than it did last month, and the hecm's doing worse. But at age 92, if you're looking to get as much cash as you possibly can, then the hecm is actually winning versus the proprietary. And you can, by the way, I should have said this before, but you can see these reds here. That's just comparing the hecm versus the proprietary, and it's saying what's going to give you more money. So if you look at 82, you'll see the proprietary. Let's see here, 72, the proprietary, so on and so forth. 62, the proprietary as well. And that's a change. Up until a few months ago, the hecm was actually returning more money. But still, when these interest rates go up, when the Fed keeps hiking, that means that the hecm is going to lose steam quicker. So, big question, and this is just an overview. What makes more sense for you? Should you do a hecm or should you do a proprietary? Now, the hecm is great if you're looking for if you want to use the reverse mortgage as a Swiss Army knife, if you're looking for monthly income, if you're looking for credit line growth, if you're looking to do anything but take a lump sum of cash right away, the hecm is basically the best way to go. The proprietary, if you need to take every single dollar out of your house, proprietary is great. If you need all of the cash at once, let's say it's for home health care, the proprietary is great. If your house is worth over 1.1 million, and actually I would look at the proprietary if your house is worth over $1 million, the proprietary is great. The proprietary also has lower fees than the hecm. So there's normally with the proprietary, there's no mortgage insurance. So that's not a charge. The origination fee depends on investors. Excuse me. I've got all the proprietary reverse mortgage investors, and normally those investors are charging about 1% of the loan size on an origination fee. And then the hecm and the proprietary will both charge title fees and title insurance. So that's the hecm versus the proprietary. The only other thing with the proprietary is if you've taken a cash out loan like a HELOC and not used it for home repairs in the past year, you've got to go proprietary. The FHA, for some silly reason, which doesn't even make any sense, I think it's just about control. They're not going to let you do a hecm within a year of taking cash out. So that's the hecm versus the proprietary. Everybody's different, though, and there are some other reasons to either get a hecm or get a proprietary. So if you're looking at different options, then give me a shout. We'll run through your scenario. We'll run through your situation, and absolutely glad to answer your questions. So that's the hecm versus the proprietary. I didn't do a summary screen, but I want to. By the way, this is the website, reversequotes.com. And this is how to reach me. Again, this is my contact information right here. Go ahead and pause it and write it down, and then feel free to reach out with any questions that you might have. So, all right, let's just go back to me real quick. I want to do a quick summary for you of this stuff. So, as we know, interest rates keep going up. The Fed wants to put a handle, and this goes into there's a little techno babble here, but I'm going to try to keep it kind of light. The Fed is going to keep on raising interest rates. How long? We don't know. Into 2024, we're not really sure, but we're pretty sure there's going to be an increase in either November or December, and a slight chance of an increase in September, although I'm kind of betting against it. But what does that mean if you're looking at doing a reverse mortgage now versus the new future? Again, 2024, I don't know. They'll probably hike it again, but the hikes are going to kind of slow down. But I would bet that if you're looking at loan sizes now versus loan sizes in November or December, they're just going to be, this isn't good news or anything, but I promised you in this channel that I'm going to tell you the truth. Reverse mortgage loan sizes are going to be higher. They're higher now than they're going to be in November or December. If I'm wrong, fantastic. But all the data, we expect the Fed to increase the rates. And we know that when interest rates go up, you get less out of your HECM reverse mortgage. The proprietary is holding strong. So the proprietary is doing okay. But if you're looking at a HECM, you want to do it within the next couple of months, give me a shout. We'll go over numbers. I'll answer every single one of your questions. I'll do my best to. And I don't think you will have a question that I can't answer. And then if you do ask me to help you, I'll do my very, very best for you. All right, that's about it from here. Again, my name is Jason. My contact information is below, or you can just rewind this video. If you need anything at all, feel free to reach out. And I assure you, I promise I will do my very, very best for you. All right, take care of yourself and look forward to seeing you on the next video or talking to you live on the phone. Take care.